Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. When we look at the week that was, we can see that for the most part, the market ended flat for the week. The Dow rose a little bit more than the rest, and now we can see the Dow is up more than the rest of the three major indexes, the dow-jones, Nasdaq, S&P 500. For the most part, again, the week was flat. We had Wednesday, which basically was the worst one-day percentage drop in about 3 months. And then we had Thursday and Friday bring the market right back. Italy came into the forefront. Their debt, whether or not they're going to be able to pay back their debt and their bonds. Greece also continued to be in the forefront from the standpoint of the prime minister is now going to resign after he said they were going to possibly opt out of the bailout package. Really nothing on the corporate side, and not much on the economic side either, although on Friday, the consumer sentiment for University of Michigan came in better than expected. For us next week, we do have a couple earnings, but as you can see, earnings are starting to fall off. Maybe Walmart or Home Depot will say something about the consumer. We will look at the economic calendar to see that we don't have anything there as we head into Philly Fed. So what we're seeing is we're getting in here into late November and December. Some of our big traders, hedge funds, are going to start, leveling off, reducing their risk and get prepared for 2012. So as I always say, what's going to be our catalyst? What's going to move us higher? What's going to move us lower? Or are we just going to stay the same? Let's pull up the charts and take a look. We are looking at the daily chart for the S&P 500, and we can see our lovely move here in October, and then now the market has begun to range right in here with our last swing high in October up here at the 1300. And basically what we have to watch now is as the market November has started, we're seeing the market consolidate in between 1200 and 1300. And as we just talked about, what's going to be our catalyst to move us out of this range? So we've had 2 weeks firmly in this range. We had this beautiful inside bar here, and this is a good illustration of once we broke that back up, even though it's counter trend, but it's not counter trend because there is no trend. We're going sideways. So you can see all these inside bars. Inside bar, this would have worked to the upside. Inside bar really didn't break into here, and that would have got you a little bit. Inside bar, break into the upside. So the market's consolidating, and what's going to be our catalyst? Now, we can see our indicators are all starting to head back up to overbought on the daily. When we zoom out to the weekly, this is where we had that conflict where our weekly and our daily were not in agreement, because you can see our weekly, well, actually, you would say, except for MACD, they're also trying to head back up. So, this week's price action did bring a little bit of agreement. But we can see on our weekly that we put in an inside bar here. So that's showing you that indecision about the market and that consolidation of which way does the market want to go. And so you definitely want to mark the high and low of this weekly candle as we look out and see which way the market wants to head from here. We'll go out one more time, and let's zoom in a little bit more here. And we can see on monthly we're also putting an inside bar, but of course there's still 2 more weeks to go there. Switching over to the NASDAQ, and we'll see also have to go back to the daily. Sorry. And we'll zoom on in. And here we can see the range is 2750 is 2740 down to 2500. You really can go even tighter, so 2740 down to 26 as our tight range for the market here in November. And although we don't have a couple inside bars like the S&P 500, we do again see that consolidation, and we can see that the indicators want to head up to overbought, but again, they're really kind of floating in the middle because of this consolidation we're seeing on the daily. When we zoom out to the weekly, do we get another inside bar like we do on the S&P 500? Let's see. We do not have an inside bar on the S&P 500 because we fell off. Now, if you remember when we were talking about the week that was, the NASDAQ actually fell this week while the Dow rose, and I think the S&P 500 rose just a little bit. But you can really see this sideways action 3 weeks in a row here. We moved up. We had our inside bar, moved up, and now we're just kind of ranging in between the range we mentioned. We'll go out one more time to take a look. And we can see, again, the inside bar, market took that out. Now we're range bound inside the 50 moving average, holding up as support here on the monthly. So the theme, the story still remains the same. What is our catalyst to get us out of this range? Okay, so we are starting off with the market leaders with Apple. And Apple, although it was consolidating, but you can see we broke the 50 moving average and we came down to support, and the support of 383, 384 is trying to hold. We have some violations, some wicks through it, but we haven't closed below that. If we do, we're probably going to run down here and test this 200 moving average again like we did in October. So we'll see, but right now, Apple definitely sideways, possibly sideways to down with the last Wednesday, Thursday, Friday action. What about Amazon? Amazon sideways action, holding on though. It's holding on, but I'm just going to say sideways. But you can see we need to get above 219, 250, 219.50 to really see us fill this gap area in here. Google sideways, but you might even say sideways to up here. Let me zoom back out for a second, and we can see this last gap up here on earnings, and the move up was to 626. We're back in the 600 range. We need to get above these arrows here, these wicks here, to really retest that swing high. I'm not really sure if we can do it. I really wouldn't be trading it yet, but I would say Google is sideways to up. Sure. Goldman Sachs, so one sideways to down, one sideways, and one sideways to up. Goldman Sachs, you probably would say sideways to down. We can come in here, draw another. Let's see where we are here. This is where this is here. Remember what we were talking about Apple, about it hadn't actually closed below. And so you might try to draw something like that in there for Apple. I'm sorry, for Goldman Sachs. But it's Goldman Sachs, I would say sideways to down. We're going to add a couple. Let's add in IBM. IBM certainly is sideways. You might be a little biased and say sideways up, but overall you're going to say sideways. There's a top part of it. Not really going to draw a bottom part of that quite yet. I don't even think we could draw a trend line, but we can see the 20 and 50 moving average here trying to hold up like the market. IBM's sideways. Intel. Another one, looking pretty good, maybe sideways up, but definitely at least you would say sideways. Pretty much right where we are right now. So potentially sideways up. Of course, we can see the 25 right here from October. 20 moving average though did hold up as support. 20 moving average did hold up as support. The fall that is Netflix. Really impressive. Never really got above the 20 moving average. And that's kind of basically where we are now. So certainly you want to watch 75 to see if we make a new low. But sideways action here on Netflix. And price line. Sideways. I mean, we did break out of the range, but you notice even so, these wicks that are over here were not violated. You can see the actual wick right here is basically where we went, and now we pulled back. So I would say sideways, and look at, you can see better on the 15-minute how we're kind of coming down into the point of control. So price line, I would say sideways. So primarily we're saying sideways. We don't really see a trend. A couple sideways are down, a couple sideways up, but overall sideways. And again, what's going to be our catalyst that's going to move our stocks higher? Now we're going to try to look at some of our sentiment leaders here, and we're looking at the dollar right now. As we've been saying, the market is consolidating. Notice that the dollar rebounded a little bit, and now the dollar for the past week or so has consolidated, holding up to 76.50 as the base here. And so we're seeing a little sideways action here in the dollar. We are below the point of control, but you can see the volume accumulating here at 77. So it should be interesting if this can hold. And we don't have a lot of data coming out that really could hurt the dollar this week. But we'll have to see. What about gold? Gold made a nice move up here, as we talked about last week. You can see 1750-ish, 1748 holding a support. You could say this is a modified rising 5. We made a move, pull back some inside bars, and now we're coming back up. So we definitely want to watch a break of 1800 to see if we can get back into this 1900 range from back in August. And then the best chart we're going to look at all day, crude oil. Look at crude oil. You certainly feel it at the pump, and now you can see it in the chart. And the thing that's interesting about this is, remember, we talked about this last week, that the crude oil hovered here between 95 and 102 for a while, broke out of it, came back into it, broke down. And so now here we are back in that range, above 95, and again up to 92. So it's going to be interesting to see if crude oil can continue to make that move higher, now that we really had this great move from October. And in November, where the rest of the market is consolidating, crude oil continues to rally. As we come to our education spotlight, we've been spending a long time talking about trading plans. Really, anybody that's been with me long enough know that's all I really talk about. But we've really been talking about the components. We've really been talking about the back testing and really having a firm understanding of who you are as a trader. And the reason why is that the golden rule in trading is cut your losses and let your winners run. It's better to have small, frequent gains and limit your loss than it is to have big gains and big losses. You can be profitable either way, but it's more important that you live to trade another day than to blow out your accounts month after month after month. I've talked to so many people who blow out their accounts, borrow money, take money from other places to fund the account again, and then they blow it out again because they haven't changed their philosophy. They haven't changed who they are as a trader, and so they make the same mistakes. We've talked about in the past, would you rather be Pete Rose, the Major League Baseball hit leader, or Adam Dunn, who's either a home run or a strikeout? Again, you can be profitable either way, but the consistency of small frequent gains, letting your winners run when able, but more importantly, cutting your losses, and there's more consistency there, there's more stability there, where you can have predictable income than the swinging for the fences every single time. You can find us on Facebook, YouTube, and Twitter. We have a page on Facebook, Are You Financially Literate? And our resources, we have our free 5-part video course on high probability trading. It gives you a real insight on the criteria that you should have before you enter trades for your setups. Now, it's just really talking about your setups, but it helps you frame the market so that you're looking at high probability trades. This hopefully will give you an insight to who we are as coaches and how we can help you one-on-one develop that personalized trading plan, come with a plan that does allow you to have small successful gains while cutting our losses and limiting our losses. We have our video course, $99. You cannot beat that price. And again, it goes over everything: the introduction to trading, technical analysis, chart patterns, money management. Then we talk about how to do your trading plan, and then we talk about specific trading setups. Most people charge thousands. We're charging $99 because we believe the true change in who you are as a trader is not in a course, but in coaching, and you're developing a trader's mindset. So we want you to get the course and have money to also get the coaching. If you're trading futures, why not get the best intraday margin you can, low as $300, 20 free trades. And finally, we've got a great charting package for you, works on both Macs and PCs, so you can scan and find the latest and greatest moving stocks. In the end, it does make a difference about your system or your indicator, or even if you can identify high probability trading setups if you can't pull the trigger. And that's what we do here at Move It with Mike. We give you that trader's mindset, help you develop that so that you can implement and follow your trading plan day after day after day. Thanks, guys, and I'll see you next time.